right, guess we gotta get going, huh? Hey Mom, turn the music down. I'm starting my stream. All right, thanks Mom. All right, cool. Good morning everybody, come and tell-vous, how are you? Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. I believe if you're on the Traders Way channel, what is there, 5 or 6 or 7,000? And then if you're at FX Bootcamp's channel, there's 10 or 12 or 15,000 there. Coolio! That means there's approximately 6,000 videos on YouTube. 6,000 based on my work in the foreign exchange market. That's a lot of resources made available to you. So we gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades. Let me remind you, the trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So my name is Wayne. Been doing this a long time, so let me know how it can help. That is the raison d'etre. I'm here to help. So the squeaky wheel often gets the grease, so let me know how I can serve you. I consider myself a humble servant. You might consider me an arrogant servant. I think I'm somewhere in between. Look, I'm studying Stoicism. Those are the skulls of... Oh, I got to go this way. The skulls of fallen Vikings that I put into Valhalla. Huh? Memento mori. Yeah, so anyways. Oh, I look rested. Thank you. You know what it is? I haven't worn this shirt in a very long time because I got fat for a couple of years. But it's a custom-made shirt, so I think it's just a bespoke clothes make you look rested. I think that's all it is. But thank you. I appreciate that. So anyway, so let's cover technical and fundamental analysis. Don't forget, we got a Fed meeting this week. So that is going to be the center of our universe. So we're probably going to need to squeeze some trades in sooner than later. But be careful. The vol might hurt. And not just volatility, but I think probably lack of direction, I think, is the biggest risk. Not just volatility in the sense of the markets moving. The bad kind of volatility, right? The bad kind, where you get lots of ups and downs, but nothing happens. It goes nowhere. It just goes up and down just enough to not have you successful. So anyways, that's the biggest risk. So we got to be careful. There are, like I said, 7,000, 6,000 videos on YouTube associated with my work. Please feel free to utilize those as free training resources. Also, in the description below the video, you will find a link to a free training course on the FX Bootcamp YouTube channel. It's 4 videos, covers moving averages, oscillators, so on and so forth. So you get to understand my chart setups and the basic techniques of technical analysis that I've been using for more than 20 years. I was trading the day the euro went above parity for the first time. I think I started trading when euro was 88 cents. Those were the days. So that means that was 20 years ago. So I've been trading at least 20 years. I've been sharing my work for about 18. Cool. Nice. In the description below, you will find a link to my book, Strategic and Tactical Forex Trading. Still pretty good, I think. In the description below, you'll find a link to fxbootcamp.com where you can get 65 hours of premium foreign exchange trading videos for a whopping $88. There's also, in the description below, there's a link to a live course that I'm teaching right now. It's kind of like going to a university classroom, online, of course, and I'm teaching oil. So today I will be, or not today, on this week, on Wednesday, I will be taking you through, since we just finished geology and seismology, we're going to go into the infrastructure part, and I'm going to walk you through a drilling rig, step by step by step by step by step. I'm going to take you on a virtual field, a field trip. I did this in the last one, which is kind of cool. So I'm going to do that again. I'm going to teach you what a drilling rig is and all the components and all the steps, and it's amazing the amount of detail. And then I'll take you on a virtual field trip to see it actually in play. And then I'm going to take you through that whole process when you're out in the oil patch. What happens when you drill a hole, you build a well, and then stuff comes out? Oil, gas, water, sand, it's all coming out. Mud. What do you do now? How does this go? Where does that pipe go? What does this piece of machinery do? What does that piece of machinery do? And how does it actually work? The pressure goes this way, and this goes that way, and this comes out, and then we're boop, boop, boop. And where do the midstream people come in? And how do you, like, how does it leave? How does it leave the oil patch? So anyway, so we're going to go through all that. And I'm telling you, it's incredibly detailed. We've been working on it for dozens of hours. And I'll present it to you on Wednesday. That's just one of the courses in there. The link is in the description below. And then what? What? A link to tradersway.com, an ethical foreign exchange broker that has common sense, business ethics, a business model based on a symbiotic relationship with their clientele, which is a fancy way to say they're not trading against you. And instead, they rely on your ability to trade profitably, because then you'll trade every day for years and years and years and years. And that makes you a fantastic client. And then, of course, you'll like, hey, man, I love the execution speed. I love the spreads. I love the swaps. I love tradersway.com. And that's what a symbiotic relationship is. Cool. And by the way, in my humble opinion, that is very unique in this industry. So give them a chance to earn your loyalty and respect. Tradersway.com. Get on with it. Let's go. Okay. Matrix says the shirt looks good. Thanks, man. Or what? Or the skulls. Which one? The shirt or the skulls? Yeah, the skull thing. My wife hates it, of course, but because she's just like, you're a preppy little prick. And I'm like, no, I'm like a cool biker. I might get in a bar fight later today. Maybe I'll stab somebody. And she's like, that's... Yeah, I'm a tough motorcycle biker. I'll get on my hog later. Maybe get in a bar fight. Yeah. Nope. So anyway, anywho, no more fun. Let's get on with it. Japanese yen was very strong, and then it wasn't. Okay. Then it was strong, then it won. So let's go further out. That's just today. Let's go further out. And this is kind of this process where it dropped like a ton of bricks. Okay. As we're approaching the Fed meeting. And you'll see, same thing with dollar. Dollar was really strong. And then as we approach 1 week before the Fed meeting, whoever was buying dollar took profit. That's how I look at it. So you might look at it and say, oh, everybody's selling. I don't know about that. So anyways, profit taking is how I look at it. Because if I look at it as profit taking, then my point of view, my reference point, is that this is going to happen next. I don't know if that's true, of course. I can back up with some logical rationale, but ultimately I can't predict the future. But I try to research the future. Yes, past performance does not predict future results, but I look at multiple things. What has been happening fundamentally? what are the key issues that we're discussing now, and how would that impact future economic data? And I start to then research what that future economic data is projecting to be. So, for example, I could look at the Fed funds futures market, which is the pricing of very, very short term. Well, I suppose, how about this? The pricing of bank-to-bank loans, banks loaning other banks money. And when I derive from price, I can figure out what interest rate they think the market will have. So this would be the Fed funds futures market. What the Fed interest rate will be in 1 month, in 3 months, in 6 months, in 9 months, in 12 months. I can start looking at that data and say, well, I have some hunches on what I think where the Fed is going to go and how far they're going to raise interest rates in the next 12 months. I have my hunch. But what about the hunch of the biggest banks in the world negotiating money with each other? What do they think? And I can derive that information from price, not from opinion. And that's interesting, isn't it? And from that, I might be able to develop an opinion. And currently, that opinion would be something like that. But I don't know. So I got to be around to do that, right? Russia and Ukraine would be exogenous shocks that are impacting economic data, but it's not the primary thing. Okay, it's not the primary thing, right? The primary thing is we're all pit pirates. And so we got to incorporate that as well. I would say it's in the United States, it's the Fed first, and then a bit of Russia, and as far as I meant China, a bit of China, but as far as Russia and Ukraine, that's not what's important in the United States right now. And I can show you, okay, no, not that one, this one. Okay. By the way, there's what we were talking about last night in the day trading group. Whoop, whoop, whoop. Interesting, huh? Anyways, this trend, if you do the standard deviation, will tell you is down. Well, the war in Russia, or the war in Ukraine with Russia, would push this up, but that's not what's impacting America right now. A shortage of oil supply, a threat to natural gas, all of that kind of stuff. That's killing Europe. That's killing the UK. But oil prices are down. That's not what matters to America. What matters to America is the high terminal rate that targeted by the Fed, and that creating a recession in the U.S. economy. That's what's in play now. It will probably be different later, but that's what's in play now. Okay? So that's just one way of looking at it. What's important to the U.S. economy? Is it China? Well, the Chinese recession is creating inflation in the United States. Okay? And that's what matters. By the way, a former president of Harvard University, Larry Summers, who was also on I believe it was the President's Council on Economics, and I think he's a Goldman Sachs guy. Okay, Larry Summers said something interesting the other. I don't know if I'm a big fan of Larry Summers, but he's not an idiot. Doesn't make him an angel either, but he said in an interview Friday that what the federal government needs to do immediately is jack up taxes. That's interesting. If you recall, I spoke about that, I don't know, 3-4 months ago. I said this type of inflation created by the fiscal government, the federal government, using fiscal policy of the federal government spending money. This is not the Fed, okay? This is not the Fed doing quantitative easing. That's a whole different issue, and I have no problem with what the Fed did. Okay? Now you might argue, well, they were late raising interest rates. Okay, fine, whatever, but that's not... Oh, is he? No! How could he be a Wharton guy if he was president of Harvard? I'd have to Google that. That would be so strange. Really? I find that hard to believe. Possible. But anyways, the type of inflation we're facing now is from the federal government, fiscal spending, the extra $5 trillion. See, the Fed put $5 trillion in, and the White House put $5 trillion in, or Congress put $5 trillion in. Okay. So the way that the Fed pulls its money out is quantitative tightening instead of quantitative easing. It's easy. They just remove it. Well, the government put cash into the market. And the only way the federal government can remove it is raising taxes. Otherwise, it just floats in there. So what they could do is raise taxes and pay down the debt, and now there's no money. See, the people that got money for free should pay taxes, high taxes. The money then goes to the U.S. government as income, and then what the federal government does is then pay down the debt that they occurred when they gave the money away for free, pay that debt back, and the money goes back where it came from. Okay? So that's what I said about 4 months ago. That's what you are supposed to do in this situation. The same way where the Fed builds up their balance sheet and then sells off those bonds or just let all the bonds expire. Right? The Fed can literally do nothing and all the bonds will expire. Okay? Well, how does the federal government get it back? They're supposed to, in the textbook, raise taxes and then pay back the debt, and then we're all good. Someone's got to pay the debt, right? If you got money for free or your neighbor got money for free, where did that come from? That's a debt. Somebody's got to pay. So the government should say, well, we don't want your grandchildren to pay. We should pay now. So we're going to raise taxes temporarily for 2 years to pay it back. Something like that. The thing is, a politician would never do that, right? All right. Now, Richard's just got me on fire here. All right. Wikipedia's got to be it. So, former Secretary of the Treasury, former chairperson of the President's Economic... Come on. Okay. Secretary of the Treasury, Director of the National Economic Council, that's what I was going, served as president of Harvard University. He teaches at the Harvard K School. You're saying this guy's a Wharton dude? Where did I miss it? Where does it show education? guess over here, born, political, he's a Democratic, macroeconomics, Keynesian, academic background, thesis. Why doesn't it just, am I missing it? Yeah, why doesn't it just tell you? Oh, down in here, career, education. At age 16, he entered MIT. Holy smokes. Wow. At 16, he's going to MIT. That's amazing. He was going to study physics, but then switch to economics. He attended Harvard University as a graduate student. And then he became a Harvard professor. All right, so he did MIT and then Harvard. He's not a Wharton dude. Am I missing this? He was he taught at the London School of Economics. All right. Yeah. He spent most of his childhood in Pennsylvania, though. Anyways. He was a chief economist at the World Bank. I overlooked that. That's interesting. Anywho, there you go. Yeah. That's crazy, though, huh? 16 years old, and he gets accepted at MIT. I've met the lead recruiter for MIT in Georgia. My son is in very advanced math for his age, anyways. And he has an engineering mind, so that's definitely on our thought process for him. And looking it up now, one of the minimum requirements for a kid to get into MIT is 2 years of physics, which means you start at the age of 14, you should already be in physics, which means you've done trigonometry, you've done calculus, you've done algebra 1, you've done algebra 2, and you probably have done statistics so that you can learn things like machine learning. All before the age of 16? Oy vey, huh? But I guess most kids go when, is it 17? I don't know, but still. Like I said, he may not be an angel, but he's definitely not an idiot, huh? All right. So anyways, my oh my WTI, I read this as recession, but, and yep, that's a big but. Okay. But be interesting to see what happens now. What is this? What is this? Oh, yeah. I got to go to Porsche today. Going to the world headquarters of Porsche. Not world headquarters, U.S. headquarters. You should see this place. Oh, drop my mouse. I was thinking we could do like a Forex conference here, actually. It's one of the reasons I'm going to be checking it out. Look at this place. This is where I'm getting my oil change. It's going to be cheap, I can tell. So they got this racetrack. Not too bad. You can bring your own Porsche. You can rent one of theirs. But this building has meeting rooms in it and a racetrack. Here's the one in Atlanta. Driving, young driver experience, business center. Huh? Look at that. We should do a Forex conference here. They have restaurants and stuff so they can cater the food. Yeah, look at that, huh? There's a museum. You can go on the track. There's some simulators. And I'm like, dude, we need to do a Forex conference here. That's where we need to go. Yeah. Anyways, I'm just going for an oil change. But I want to check the place out. See if we can do it. All right. But we can compare dealerships. Which one is dumber, BMW or Porsche? I had to pay a lot of money to put a brand new brand new battery in a BMW. They're like, we have to reprogram the computer. And I'm like, what? That's stupid. What? So anyways, we'll have to pay attention to that and find out which one is dumber, Porsche or BMW. Which one do you think is worse? All right, so take a look. Right now, I see some weakness in the U.S. dollar, 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 and weakness in both dollar and Swiss franc, neutralizing the volatility currently. You'll see most recently, if we measure this as a top, okay? And then we measure this as a change in direction. Obviously, the dollar's been quite weak. Richard says, do I day trade every day when the opportunity presents itself? Yes. Yeah. Yeah. It's pretty rare that I don't trade at all. But you have to understand there's like 3 trades going on at all times. Okay, you could look at it this way. Let me draw this. Let me make another color, make it a little fatter. There's 3 trades going on. Like I might have a monthly M2 trade, and I'm targeting M4. Okay, for example, if I was trading this, I don't trade this pair because they're the same thing to me, but obviously you can see it comes and it goes. It goes up and it goes down, whatever. Okay, but this would be a valid trade I would consider, buying it at the M2, going for the M4. And then inside of that, there's going to be weekly trade plans. So for example, a double top, lower low, and then there could be a short-term sell here, which would be a weekly play, and it probably would look like something like that. I don't have that on here. I don't have the weeklies or the dailies on here, but that would, for example, be probably what the weekly trade plan was. And then inside of the weekly day trades, for example, inside of a weekly trade, there are day trades. And I would do the same trade here. See how it's trapped? Lower low, lower high, sell. Now we're here, okay? Lower low, lower high, sell. And that could be a day trade. And then I might try the same thing here, depending on what the weekly plan is. And I could try it again, and we'd probably take it down to here, and we do a whole rinse and repeat. So there's day trades, there's weekly trades, and then there's position trades. And then inside of these day trades, you can scalp. You can scalp the Asia Open, which is, sometimes, London Open and New York Open. And by scalping, I mean you're in for less than an hour, sometimes only a few minutes. I don't tend to scalp 8 pips, but if I could scalp 25 pips, if I'm looking for that. But then again, I could try to scalp oil and pick up 100 pips in an hour or even 20 minutes. Pip equivalent, because you're like, well, oil isn't traded in pips. No, but the equivalent to 100 pips on euro dollar. Now that to pick up 100 pips on euro dollar would take all day, right? To pick up the equivalent of that on oil could take 20 minutes. So I might scalp that intraday. Okay. Cool. So the answer to your question is yep. Okay. Well, Richard, what determines your stop? If you buy, where do you put your stop? No. If you buy, where do you put your stop? Yeah. So it doesn't change anything. Yeah, we have a down move on the open today. Interesting. I'm okay because I'm hedged. Oh, yeah, I'm all zoomed out on that. Sorry, Adam. I look at things in pieces, Adam. So I have a fundamental bias first, so I'm not even looking at the candles. I create that fundamental bias before I even open the chart. And then like on euro dollar, for example, I have a fundamental bias and I want to short this. So I look at this, Adam, 21 is above the 55. The market is bullish. I'm a bear, so I don't do anything. I don't need to look any further. Okay. Now I could be a cheeky little monkey and say, well, that could end up being resistance. And maybe if it does this, I take a shot up here, right before the lower low, before the lower high, which would likely occur in the future. But I break things down in pieces. I don't look at all these lines. I don't look at all the boxes. I'm not looking at all the moving averages to make a decision. Okay? So I look at this chart and I'm a bear. So first of all, I'm done. I'm not right? I have this technically and fundamentally. I'm done. The second part now is I'm asking myself, is this the right price to sell? And I say, well, the market is bullish, so probably not the right time to sell. So I don't need to really look any farther, Adam. So I break down things into pieces. Now, if I had felt differently about this, let's say I was eager to sell here as a triple top, I would then break this down into smaller digestible pieces. So I would then drop from a 4-hour to, let's say, a 15-minute. And now maybe I could wait for a 21.55 cross down on a 15-minute and call this a top. And what I'd need on the smaller time frame would be something like lower low, lower high, and then sell it off tomorrow. But I'm not looking at everything all at once. Okay? But I can tell you this is tomorrow's sell zone based on what happened so far today. And if it makes a higher high, I'm not interested in selling today or even really tomorrow. So this has to hold today, now, because we're at the top, or I'm not interested today or tomorrow. So this will have to come down to the 55 and then make a lower high, then make a lower low, then make a lower high, and then we'll be right in tomorrow's sell zone, which would then take us down to there. So, but until it does that, I'm not interested in this information, even though it's there. It's more like if this holds, you know it's triple, right? Okay. If that holds, then I'm going to look at the next piece of information, which is this pink box, which is my tactical trade plan for tomorrow. But I won't be in it tomorrow if today doesn't work out. Okay, Adam? So don't just look at everything and go, blah. Okay? But to show you something different, do I even have, I don't think I have one on here. I used to have one called just price action. Not this one. There's a different one. We could leave it like here. Is this too many lines? See, even here, I'm not even really looking at the moving averages. Okay, because I can see we're on our way to neutral. So I already got that kind of planned out. And then I'm going to see that we're going to hit somewhere between this high and this low. So on this 4-hour chart, I probably will sell somewhere between 103 and 104. And that now, see, I'm not looking at much else. I'm looking at one moving average and I'm looking at price action. Okay? But then, if I'm going to do something else, like, okay, if we get there and I sell it, then is it a weekly swing? Like, am I going to be short 5 to 10 days? Well, then I want to add, right? So let's do that. Oops. I would want to add a tool, and I would say add my bias pivots. Let's do a weekly strategy for a bear. Okay, weekly bearish. Drop into a smaller time frame. Okay, and if it went to 104, okay, we're a long ways away from that. So let's say 103.50 to 104. That's about right. So if we got there, it would likely occur next week. And as this goes up, as we go up this week, this analysis will adjust and will help me define what that target is. Next week, I'm not interested in this week. I would think maybe it goes, if it goes up this week, then I want to sell it after next week. If it goes up the rest of this week, then next week I want to sell it. So once again, most of these lines, I'm not looking at all these little pink boxes and stuff. I see where we are now, but I'm also using price action and I'm using a bunch of other things. So I just use the tools as I need. Might be a monthly setup. So I could do that. I can go to my indicators and say, you know, what does the monthly look like? Now, when you saw my original setup, I look at sometimes monthly, weekly, and daily all at the same time. But am I looking at them every line and every box? No. It's just, the information's easy to gather because I could say, well, I can put this together and say, well, what's the plan for August? And as Frank points out, and I've already covered this in the swing trading group, the plan for August looks like this. So, I mean, we already got that done. That's done and dusted. A week ago, we talked about that. Remember last week we were down here and I'm like, I'm done selling euro dollar because I think it's going to go up. Huh? There's lots of people here that can confirm that. On Sunday of last week, Sunday, I'm like, I'm going to stop selling euro dollar. But I'm not a bull. So now we can get this next move of, let's say this week goes up, then what? Drop it like it's hot. So going back to Adam, like, oh, these lines, how can you even see the candlesticks? Well, right now I don't need to see the candlesticks. Okay? If I do this to see the candlesticks, I'm interested in pulling the trigger. And I'm looking at this as, yeah, it's a mediocre intraday trade, but I feel like it really could go higher first. But I get it. I get it. It could make the lower high, right? Like we could do one of these things today and tomorrow, okay? And then take it down. I got it. Yeah, I could. But I'm looking at that as a better setup. But until we get to these things, I'm not really that interested. I don't need to see the candles is what I was saying. So like maybe, let's say a bust through support comes up and turns like this. Then when we are here, okay, then I'll zoom in so I can see the candlesticks. Okay, you see that, Adam? So I don't need to see the candlesticks until I'm ready to pull the trigger. Hey, good morning, Manus. What's going on, buddy? Okay. So it's all strategic until it's tactical. And then when it's tactical, I'm usually actually on a 5-minute chart. Okay. Wow, man, you're traveling, huh? Putting on the miles? Yeah, enjoy. The Vietnam Memorial's right across the street. And there's usually quite a few people there, but nobody goes to the Fed. So sometimes, like I have a template, right? And this one's for scalping. And then sometimes on this one, I add, I'll add a moving average. 21, let's say. Do. I like brick red, actually. Oh, not medium violet. Where's fire brick? Fire brick. Okay. And now I could kind of scalp at that. The gray boxes are not pivot points. They're market opens. Isn't that cool? Okay. So for example, if we were going to take a look at this, you might say like, here's the Asia top and here's the Asia bottom. Was that important during the European Open? Yeah, well, we had an inside move, right? And eventually, right, there was a breakout this way. Okay. This is a 5-minute chart. So on a bigger chart, you could argue. I didn't mean to delete it all, but you could argue that this was key for a bottom. So someone could have bought the bottom. See, this is the end of the Asia Open, the way I measure it. You say, well, then we double bottom there. So somebody bought it on the low of the day. Then someone else looked at it and bought it on the roll reversal. Okay. Whether it's this, oops, you might use this line. This is the actual top. Okay. Either way. Okay. You could argue as a trader that there are two trades here. Somebody bought it here for the day. There's a day trade. And someone noticed the breakout, let it pull back, caught the roll reversal, and now they're long for the day. And now I'm only looking at candlesticks. So I want you to think about the mechanics here. How are traders actually trading? So the London boys get into the office right here. What did they do? The bears said buy at the bottom. Bulls, sorry. Bulls, let me redo that. Okay. The bulls said here, they put limit orders, buy on the bottom. And the bears put limit orders and said sell at the top. Okay. Then it made a higher high, wiping these guys out of the market. So then the bulls they can afford a second chance. And they said, okay, buy at the roll reversal. You see, like the mechanics of how traders are trading? This is a lousy, no good, stinking, worthless 5-minute chart. And it's all candles. But you can't do this until you've done your other research. That's all. So Adam, I don't even know if you're listening, but there you go. Some people just log in and they're like, Wayne, you're an idiot because you have so many lines. I'm like, yeah, guess I am. Have a nice life. Because those people usually leave too. So they just want to have the opportunity to heckle and leave. Cool. Good. 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 Ja, that's good, ja. All right. So there you go, USD kitty CAD. Dollar has been stronger. The US dollar has been stronger for a period of time than the kitty cat. So let's take a look at other euro trades. And here's a euro CAD trade. And it's starting to work out. What do you think my trade plan is? Oh, I don't care about cars. What's my next car? I don't know. Yeah, I'm a car guy, but I don't care about cars. I don't know. I don't know how many cars I've owned, but it's more than 100. Um, I'd say the Porsche is the best built car I've ever driven. But so would I buy another one? Oh yeah, yeah, for sure. But I don't want a 911. I'd probably buy a Panamera, but I think they're ugly. I drive a Cayenne GTS, a Magnum, which is rare, but I'm not in love with it either. Um, so I don't know. I don't know. I don't know. I just don't. I don't care. Yeah, I'd buy one. Sure. Oh, it's black on green. Tim, one of the things I was thinking about doing with Ryan is putting together like a weekly meeting for sort of for people that want to review, I guess, everything in the courses, like uh, like a group that is working on refining the knowledge. So going back through the courses and training and techniques with a guide and with the ability for you to ask questions like, well, what about this and what about that and how does that work and how do these two different courses work? Like, you know, how does swing trading and day trading work together, and then how does price action go into this, and you're just sort of like a live group focusing on refinement of knowledge and skill. See, like when I do my swing trading group and my day trading group, I'm not teaching you. I'm asking you questions. And same thing in Ryan in the London group, very much asking questions. But what if you're like, well, you're struggling, not struggling, but you're working on the knowledge aspect and have a million questions. Well, so I'm thinking about putting together a group for that, for people that want to do that. I don't know if there's enough people though. Okay. But anyway, anywho. So I'm stuck here. It's a mediocre setup, but fundamentally it makes a ton of sense. Technically, it's a reasonable price. And the trade plan that we developed last night and last week, actually, and the week before, which is kind of funny, is taking it down to, I don't know, 29.5. So 200 pips probably on that one. Yeah. Yeah, you guys are in, but then you have to pay for Ryan's time. So it might be a small fee, and you're like, I need help, but I won't pay $50. Well, then you don't need help that much. What else going on? So that one's kind of working. Swissy is weaker than euro right now. Euro pound, pound is a little bit stronger than euro. Kiwi is quite neutral right now. Okay, dollar is even weaker than euro, which is nutso. Euro Aussie kind of trying to come around, and this is another one we talked about yesterday. And that's kind of starting to work. We got the risk here, and then we got that there. So, I don't know what's going to happen. So I took one of them, right? So there were two trade plans we came up on Euro with last night. One was sell Euro CAD and one was sell Euro Aussie, and I chose the CAD. Aussie would have been about the same, if not even a little bit better. But again, we're certainly not making lower lows. This is what kind of bugged me a little bit. Now, if we go back to last week, I think it was before the ECB meeting, right? I measured some distance. I don't recall. I think this top to this bottom and projected out to here. So that could still be the trade here. Down, 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 up, up, sell, down, 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 exit. Okay. What time do the paid streams? 7 o'clock New York time, which is pre-Asia. And then 2 o'clock in the morning New York time for pre-London, pre-Europe. It's twice a day, including the swing trading group for $199 a month. It's a steal. It's a steal. All right, let's go to pound. Okay, pound is a bit of a mixed bag. Okay, pound's stronger than Kiwi. Pound stronger than CAD. Okay, you can see up into the resistance. Pound stronger than the Swissy, but pound not. So you can see Aussie's quite strong. Okay. So if pound weakens, pound Aussie's probably a great one. Look at it from a 4-hour. You can see, and this was discussed last night again in the day trading group, because we were here last night, and the idea is, we're at the right weekly. We're at the 4-hour 21, but it's really the distance between these two, right? So your projection would have to lead you to like this idea of something like that. And, it ain't not happening. The problem is the pound is strong at the moment. And you can see, well, we've been range bound for a while now, since March. Okay? Range bound since March. Tim says, where do I sign up? fxbootcamp.com. Once you're a member of FX Bootcamp, it says, do you want to upgrade your account? You don't want the swing trading group. You want the day trading group, because when you sign up for the day trading group, you get the swing trading group. So you just log in, and at the bottom of the dashboard, it says upgrade my account. Upgrade your account, and you just select day trading group, and you're in. Easy peasy lemon squeezy. Yeah. Easy peasy lemon squeezy. So what do we got here? Oh, I got knocked out of something. There was 2 trades I had open. One got knocked out at break even, I guess. Euro, pound, Aussie. Really? Get the heck out of here. That's the better trade. I got kicked out of this? Son of a... Just when now? Just now. Son of a... I must have screwed up. I thought I moved my stop to here. And apparently I didn't. Son of a... All right, effed up. That's right, Abdullah, monthly. It's like 10 times a week. 10 times a week. $40 meetings a month for $200. I mean, dude. $5 a meeting to set up your trades. Like, what is that? 5 pips on a mini lot? You're like, oh, I don't know if I can make 5 pips. You know, oh my God. Anyways, anywho. Look, money is money, so I don't mean to make fun of that. But golly, man, you got to invest into yourself. You got to invest into your business. The more you look for the free and cheap way into success, the more likely you're not going to find it. Yeah, I don't know, Dan. I screwed up. That's all I can say. Yeah, I screwed up. I don't know what I did. Look at that. It's a good trade. Son of a... Okay. And now it's like, oh, golly. So now I got to probably do all the work again. Oh, my God. I don't know what happened. I effed up, dude. I don't know what the hell. I sold that, and that was nice. My stop was like way up. Like, I don't know, dude. I don't know what I did. You know, sometimes that's a problem with, it's not a problem, but a consequence of doing the live trading. The live streams. Sometimes it forces me to kind of react quickly. Like, oh my God, what do I got to do? Oh, it's 9 o'clock. I got to do my, and sometimes I make mistakes. Yeah, I don't trail. I'm not a trailer. But I don't know. All I can say is I effed up. It was a decent trade. So euro pound we covered. We did some dollar. We did some yen. Go back to commodities. Did we do? Yeah. Okay. I might be interested in WTI. Bitcoin's back through, which is disconcerting. I'm going to mark this as a second level of support. So it's not necessarily the end of the earth, the end of the world for this. But notice where it's happening. Do you know what this giant pink area is? You know what this is? Monthly sell zone. So the fact it kicks off there, you're like, oh, really? Now, the equal and opposite of all of that is that this is the monthly buy zone, but the problem is we started here, so it negates this. So, okay, so anyways, could be bad news for Biddy. So like this is what happened in June. So on July 1st, the trade plan was have it come up to 24, 25 and then drop it. And the thing is, the actual bottom is like 10 or something. Oh my God. And I can tell you, I was very much afraid for crypto right in here. In fact, right there. Yeah, I honestly thought we had a real possibility of dropping from 20 to 10. Like just decimate. And that would put hedge funds out of business. This would blow up cryptocurrency exchanges and altcoins and shit coins. That everything would just be negatively crushed. there'd be talk on all the news channels, the end of crypto, and the tulip bubble for the 21st century and all this stuff. And I'm like, oh my God, like in my opinion, we came close to Armageddon right there. But we'll see. If we're back at 20, threatening to go lower, oy vey, dude. Right? It's still possible. So that's that I'm less worried now. But I'll remind you, it took 12 hours to confirm my Bitcoin transaction earlier this month. 12 hours. And while I sat there waiting for 12 hours, I lost $750. Dude, there's a sign of a broken business model. If it takes that long for miners on the blockchain to confirm my transaction. And of course, the problem is energy prices are so high that they're looking at my transaction and they don't want to confirm it because it costs them more to confirm it in energy than they get paid in commission. And there you're like, oh my God, that's interesting. Because high energy prices exist, because Russia attacks Ukraine, natural gas prices go through the roof, it kills miners. And now there's no one to confirm the transaction, so it sits there for hours and hours and hours and hours. Meanwhile, the value of Bitcoin's tanking, and I'm just sitting there with a transaction pending. Usually takes, 10 minutes, 15 minutes. It took 12 hours. And I'm like, oh my God. And we're below 20,000 and falling. I'm like, dude, there was something real. There was a real problem in the real world. And I mean not the digital currency world, but the physical world of digital currency. Amazing, right? Yeah, Peter's like, I told you so. Yeah, no, I know enough to know the positives and the negatives. But holy smokes, that was interesting. Right? That was pretty interesting. Anywho, exotics. Okay. Peso's still working out. It's kind of interesting. Okay. I'll give, again, I did this a week ago, but I'll do it again. Darko in our day trading group spotted this. And I'm like, yeah, I see it too, but I don't want to know. I said, I'm still a dollar bull. I think that's going to hurt emerging markets. But if I were to buy emerging markets, Mexico is my favorite. But anyways, it worked. And then we got to the bottom of this range. And then we got right in there. And it'd be like jam your stop, and you might be able to get down to S1. We're running out of time. You can see there's not a lot of time. But for many, this is an August front run. And the actual target then for peso is 1977, which is essentially a double bottom. So what that says, if I were to read this like tea leaves, okay, we're going to drop down, we're going to drop up, and then by the middle of August, we'll be here, and then we're going to go up. Way up. And in fact, it could be more like something more like this. Okay. Okay. Yeah, well, there's a lot of things that line up with that. But again, Manus, what I'm looking at is I'm just reading what the chart says. Right? And then I'm projecting based on what the chart says. So it's like, it's just the tea leaves. Not like I don't have an... My opinion is on the long run, dollar will be strong, and that's going to hurt Mexico. But if I was going to play any of the exotics, peso would be my favorite. So if I were going to sell this, okay, I have to time it with the dollar. Okay, so this comes down. The Fed jacks up interest rates on Wednesday, and then they change their tone. And then fear kicks in the third week of August, and by the bottom of October, we're here. So I'm thinking the rest of July, all of August, all of September, all of October. That's how far my thought process is when I look at this chart. Down, up, down, up, down. I just can't draw it. If we were going to buy dollar, yeah, you don't want the negative swap, but you could day trade the heck out of it if you wanted. Okay. Okay. So you can see the dollar is weak versus the rand. But if you wanted to day trade it, I wouldn't do it yet. Probably closer to Wednesday or Thursday or Friday or Monday, right? Doesn't that sound like The Godfather? Mike, I speak English, Mike. Monday, Tuesday, Saturday, Wednesday. Then he blows up the car. He's like, I can't take this nonsense. So he blows her up. Anyways, I would wait till probably Wednesday, Thursday, Friday, Monday. Okay? So maybe next week. Oh, is that right? Man, that's really, yeah. Cool. Yeah. I'm trying to learn Sanskrit. No. But wouldn't that be something? What did you major in at university? Sanskrit? Like, oh, yeah. So I have a Bhagavad Gita, and it's in English, Hindi, and Sanskrit. I love it. Yeah. Oh, I found that book. Remember, I was looking on the Bernanke. Here's the other Ben Bernanke book, back when he was nominated to become chair of the Federal Reserve. I'm like, oh, so this is in the early days of my trading. And see, Ben Bernanke, this is his book on the Great Depression, essays on the Great Depression. And so I studied this right before the financial crisis. And if you remember, I did the biggest trade of my career Look at all this wonderful stuff. I did the biggest trade of my career, right? Sold the family's exposure to the stock market. So we dumped all our stock, put our house on the market, moved to the other side of the country, away from our friends and family, while my wife was nursing a baby and we had a toddler. We decided to move 3,000 miles away from our friends and our family because partially I read what a Great Depression is like and saw the top of the stock market, saw the top of the real estate market in California. We got, I think it was more than 8 offers on our first day. 2 of them were cash. One of them was closing in 30 days, I think, or even 15 days. Cash above asking. 1 month later, you couldn't sell your house in California. I'm not even joking. Less than a month later, the entire real estate market in California crashed. And so it's not necessarily like, oh, I read this book and it told me everything. No, but this was what I was doing back when I was, a young foreign exchange trader. I was learning economics. So I was reading. I only did this because I didn't know anything about the Fed. And they're like, we're going to have a new Fed chair. We're going to get rid of Greenspan and we're going to put this guy in named Bernanke. I'm like, Bernanke? So I need to know this guy. I don't know why. I just need to know. So then I studied all his essays that he wrote at Princeton, I think it was, and about the Depression and what the Fed did. And I thought that was interesting. And I bought another book by Bernard Baumhole. Worst, terrible name, isn't it? Hey, what's up, Bumhole? On economic indicators. And so that's what I was studying. Economic indicators, like what is CPI, what is PPI, what is PCE, what is GDP. I didn't know any of that. And so I started studying that. And at the same time, the consequences of those indicators going haywire because of policies at the Federal Reserve and the change in the economy. And I was kind of like doing cause and effect at the same time. And maybe that was helpful. Okay. And it was before you could really Google this stuff. It really was. Imagine Amazon.com was a bookstore. Can you imagine that? That's all they sold were books. And they didn't have anything on Forex. So I was doing stuff like that, really indirect stuff. When I studied Gerald Appel's course on MACD, he's the inventor of MACD. And in the 80s, because this was very early 2000s, anyways, so in the 80s, Gerald Appel was teaching people about he did a training course on the moving average convergence divergence indicator. And it was mathy and it was based on long-term charts and all that kind of stuff. But he did a course and of course, everything were like printed out and put into a binder, that kind of stuff. And there was no DVD. You couldn't watch, like, this is way before YouTube. You couldn't really watch videos on the internet. So if you were going to get a training video, you bought a DVD. This is the world I lived in. And if you looked at training courses on technical analysis, it was all about stocks and futures and stuff. And I'm like, there was no Forex stuff. If it was like DVD number 9 out of 12 DVDs, and they gave you a general, simplistic, you would find like unbelievably basic overview of the foreign exchange market. So you're like, there was just nothing out there, man. Just nothing. Manna says, yeah, great primary sources and experience. Yeah. But the thing is, I think it's just hustling. I don't think the knowledge necessarily or directly makes you the better trader. It's that you're willing to do whatever it takes. You're resourceful, right? You're a hustler. Right? Ooh la la, look at this. You're a hustler, and that's all that matters is you're hustling to learn. Like, you'll do whatever it takes. You'll go anywhere to any length. You'll try anything. You'll be as extreme as possible. You'll do things just to be extreme. And I think that's really what it is. Okay, so anyways, mark your lines. Mark your lines. There's the top. So, for example, guys, if later today this turns around and makes a higher high, what do? Higher low, buy. Sultan, are you a bull or a bear? The other thing I would mark on a chart like this is this bottom, which was important earlier today. So nothing's really changed. By the way, last night I did a brief overview of the backwardation in oil futures contract spreads. You're welcome. The spread between the futures contracts. Okay, we're on the August, which is the front month. Then September is the back. So we looked at the price now, the September, the October, the November, and the December, and the spread in price between all of those futures contracts. It just gave kind of an inkling of what the hell does that mean. So, Sultan, I'm wondering if you're doing that. And I already asked you, but I'll ask you again. You want me to do analysis on oil? Cool. Are you a bull or a bear? And then I'll share my thoughts. Okay, you're long-term bear. Interesting. Ha 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 ha. Okay. Okay. So what I was talking about by looking at the spreads in between the futures markets, I was doing an overview of the physical market. Okay? What does that mean? Well, here we're trading some sort of derivative that represents the price of oil right now in the August month. So it's $97 and some change. And so here you're thinking it'll go up or down or whatever. But you're not. You're not actually trading oil. You're not trading a futures contract. See, if you bought the futures contract, you would have an August price, But then you'd have a September's price. Which one are you on? Are you on the October price? And you're like, wait, you're not doing any of that. This you don't roll over from contract to contract. Well, yeah, in the backwardation, it's called contango, but I don't want to go into it here. But yes, it does mean something, and I'm trying to explain what it means is we're studying the physical market because somebody buying a contract for September wants to take delivery in September. So we're talking about they're actually buying oil. Not today, but they'll need it later, and they're worried that oil will go up to $150, so they might as well buy it today and lock it in, buy the contract now to take delivery in the future. It's a future contract for future. You'll pay now and you'll collect later. You'll take delivery of your actual oil. So one of the things I was teaching people is we studied last night the physical market for oil. Not this. This is just oil now. Okay. So anyways, Sultan is a long-term bear. Okay. And so what I would tell you, let me kind of zoom in here. That is dangerous. And I did this last night, right? This is dangerous because you are at support. So the only way to have done that today is now after this 8-hour rally. Okay. You can see I already have it marked. Okay. That this was today's sell zone. And that could get you down to here. Okay. And then if that occurs today, you'd probably get something like this tomorrow. And then you probably need to stop. Okay. Now, is there a bullish? Okay, you told me you're a bear, so that's fine. So now I look at this, and how would a short-term bull trade this? And they're going to look at it differently, of course. And they're going to try this and say, the trade plan for bears today, okay, this is an Asia trade. And we're in that target zone. Let's see if I have it actually labeled. It's hard to see. I got to move this. Let me just delete that. Let me just delete this. No, I got to do it here. Okay. So you can see that the conservative bearish target was here. So we had this in Asia. It came down, and the London boys bought it low. Okay. So they could now, the New York boys could do this. I'm not saying it will happen, but that's what will be attractive to some, but only to bulls. So we don't know how many bulls, but somebody's going to do this. They might be wrong. They might be right. We don't know. Well, Sam wants to know the impact of sentiment. I generally ignore sentiment. Yeah, Dan, I don't believe anyone when I say, what's your long-term view of oil? You're talking about it, a 50-year move. No, you're talking about a 4-hour chart or a 1-hour chart. I mean, a 4-hour chart or a daily chart kind of thing. You're already short from today. Well, I don't understand what I mean, what you just sold? You sold at 98.99? All right, I'd have to figure that out. I guess you took it here off the 55, so maybe, yeah, 98.50, 99. So you must be in here, or a 4-hour chart. You kicked it off to 21. Okay, so then your target, if you're going to be on this time frame, let me change my indicator. If you're out there, oops, wrong one. Here we go. Let me get your target. Okay, your target is, so that's $92.34. So basically a double bottom. You're on your way down to 92, right? 98.35. 98. I don't, hang on. I'm going to try to understand that. 90, what did you say? 98, 83, sorry. 98. 98.83. Okay, you just sold off the sun. Okay, yeah, basic trade. And yeah, so what that chart tells me is $92.34. Frank, I would just Google earnings season. Earning calendar. Dan, there's a negative carry. So going back, one more comment on Sultan's trade. It makes sense. It's a decent trade. The target is here. Okay, great. And if it doesn't work, Sultan, it'll look like this. Okay. So right now your stop would be above this channel. Let me do that. Can you see this channel here? La 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 la. So your stop would be at what? 102? 96. Well then no, you're mixing up your strategies. That's clearly a swing trade. So to day trade it, no, there's not enough reward. 96, 73, 96. No, you're kidding me. I'm telling you 92 and a half, and you're like, well, I'm going to get out way before that. Well, then you didn't do this trade right. You took too much risk for the amount of reward that you're considering. Is that right? You're doing level 1, Danny? That's cool. Oh, level 2. Sweet. Oh, yeah. No, that's legit, right? That's legit. All right. I guess I'm done. We'll leave it at that. It's hot today, huh? It's hot. Heard it was 100 degrees in New York City. New York City. Everyone's in the Hamptons, though, right? Yeah, Matt says it's 114, but it's always 114. Well, not in the winter. It's the summer, yeah. Yeah, I've been in Arizona in 114, and, it's hot. But the worst, I think, is Austin, Texas. Man, when you combine heat and humidity, holy smokes, is that place nutso. So thank you for being in the community. Please click the like button on your way out. It'd be nice if there were a couple of 100 likes. Peace on earth. May the pips be with you. May your profits be above average. Cheers.